Thanks everyone for joining us today for the charter panel, for the global charter panel. And I've got some fantastic panelists here. My name is Richard Coe. My company is called WINGX. And what we're going to do is, just before we get started on the panel, we're going to talk about a few trends we're seeing in the global charter market, and then we're going to investigate those trends with the panel. So I'm actually going to use these slides over here, if you can see them. And I'm going to talk about what's going on in the world of business aviation so far this year. So what this shows is, as you can see, a global map with the circles representing the year-to-date trend in business aviation traffic in 2022 compared to 2019, so going back 3 years. And at the bottom, in case you might be slightly obscured, the bottom left says 15%, and that represents the global increase in business aviation traffic, by which I mean business jet and turboprop sectors in 2022 through 9 months of 2022 compared to the same 9 months of 2019. So that year-on-year figure next to it is the 14% increase in September 22 to September 2019. So you can see that's very substantial growth, and you can see that growth is 13% in North America, which represents about 70% of all the flights, 19% in Europe, and in some other parts of the world, even higher growth rates, which clearly kind of reflects on the way that business aviation has stepped into the breach, literally, as the global airline industry has eroded during the pandemic, and has found a much greater demand than ever before historically. I want to show this chart as well, because the lines on the chart represent the number of departures globally, again, for the 39 weeks through September 2022, and they show you the comparative lines for 22, 21, 19, and 20. So it gives you some idea about what's happened this year. You see that orange line at the top, which is 2022, setting out at the start of this year with big gains even on 2021, and certainly on 2019. As the year's gone by, you can see it converging with 2021. So what we've really seen over the last 15 weeks or 10 weeks is that 2022 and 2021 have essentially converged. So we've seen the peak, and now we've got a convergence between what we saw last year and this year. What this chart shows is the increase in activity, which has been operated by the leading charter operators. Okay, so some of these are now groups which comprise at least 5 or 6 different OECs or individual charter fleets, and that's as a result of the consolidation we've seen. And we're talking here about NetJets, which has essentially still comprises the 2 units that existed before the pandemic, NetJets and Executive Jet Management. And likewise the FlexJet program, although they both added a good deal of aircraft, and you can see that on the bottom column chart that shows the difference between the 2019 fleet and the 2022 fleet. And then if you look at VistaJet and Wheels Up, these 2 groups have combined a whole number of acquisitions and now much, much bigger fleets. You can see on the top that even the non-consolidated, or the group that hasn't added lots of other businesses, like NetJets and FlexJets, they're seeing substantially more traffic in 2022 compared to 2019. So the orange being 2022. So for example, FlexJet is flying 182% more hours than during the same period, the 9 months of 2019. So it just shows you, we're talking about charter in this panel, that the top operators have far exceeded the sort of overall growth in business aviation traffic due to their much bigger fleets and very strong demand. What this chart shows is across different operator types: aircraft management, branded charter, corporate flight department, fractional, and private flight department, what's happened so far this year if we compare, and actually I've started it from October 21, if we compare versus 2019. So it's all positive, it's all above zero, it's all busier than it was in 2019, but you can see that, as we reflected on the earlier chart, there has been a sort of decline in that growth, so the kind of second derivative of growth has been declining, and most particularly in branded charter. So you can see essentially what I'm saying there is a branded charter has come down 24 points. It started the year, or back in October rather, it was almost 45% higher than 2019, and as we come into September, it's still up on 2019, but only by a little under 20%. This is the last chart, I promise, before my more esteemed panel get involved. But what I wanted to show here was that in October so far, and this is through the 18th of October, we are seeing, and what I've shown here is growth versus 1 year ago, 2 years ago, and 3 years ago, across the different operator types. What we are seeing now is a very rapid slowdown in the year-on-year activity in the branded charter space. So we've seen minus 17% in terms of the number of global departures by branded charter operators, October 22 versus October 19. So I hope that gives some perhaps some discussion topics, but I'd like now to introduce my panel, and we have Chris Clayton from the London Business Jet Centre. Chris runs the London Private Jet Centre and can certainly talk about the revival in business aviation, and in particular the charter market, which is using a very competitive space in the London context. Andrew Ladouceur is a charter manager, charter director, right, at Short Hills. So I believe you've got Falcon aircraft, and we can talk a bit about your fleet and the way you've experienced the boom in biz av and charter demand in the US. And Wendi Matthews-Ortiz is the VP at Hunt and Palmer, and clearly you're a broker, and you've seen across Hunt and Palmer's business demand not just on the bizjet side, I guess, but also across cargo and commercial jet. So that'll be very interesting to hear. And finally, Andrew is commercial director at ACASS, which is a multinational business looking at the charter. Andrew running the charter business. So these are my panelists, and I'd like to if I just move along from this side, starting with Chris, ask the first question, which is essentially, what have you seen in the last year and a half as the market has sort of started to come out of the pandemic? How has that affected what you're seeing in terms of business aviation demand?
Well, I think we should start with the pandemic itself. When the work from home directive was put in place, a lot of our core customers moved away from London. They moved further away to the coast, and our traffic pretty much dried up overnight. And what we've seen in the last 18 months is businesses and corporates return, and it's picked back up. This year we're about 86-87% of 2019 levels, as opposed to last year we were sitting around the 53-54% mark. So this year, whilst we're not booming, it's positive. Okay, so you've not seen the boom. You've not seen a charter boom. Essentially, what you've seen, I think, is a real sort of drop, a dramatic drop in activity and demand in the COVID year in 2020-21, and then a recovery which is not yet complete in 2022. Is that right? Yeah, exactly that. I think our USP, one of our main USPs, which is our location, has actually served us not to be so great. There's several airports that are located towards the south of England, and probably better located for those that are working from home and mixing business with leisure and operating from those airports instead of London City. Okay, that is an interesting theme to develop. I mean, Andrew, when you look at and I'm going to guess that you've seen a charter boom, because certainly in the US market that's been very evident. Can you talk a little bit about the nature of that boom? I mean, because obviously I think what Chris is getting at is that because London City is really the sort of a business hub, that demand was really not coming back so fast in the last 18 months. What have you seen in terms of the composition of the charter boom you've experienced?
Well, sure. Much to Chris's point that we've seen an incredible boom, but much of that has been on the leisure side. More recently, we've seen some more of the roadshow and business travel come back. But that's only been more recently. But we've had an incredible boom since previous spring of an incredible amount of leisure travel.
Can you give us a couple of examples of leisure trips, which is, city pairs, for example, which have been far stronger than they were before the pandemic?
Well, sure, absolutely. And, realizing that we're a mostly United States operator, we're based out of the Northeast, so, you get your typical Aspen, Colorado, and, of course, the Palm Beach, Caribbean, Bahamas. And these are, quite clearly the leisure destinations that we've seen.
Are those different to pre-2020? Are those city pairs distinctively different? And do they reflect a different type of customer or just a different kind of demand in terms of where people want to get to?
No, it's been pretty much the same type of destinations from year to year, and it's always been the case. You see what seems to be the new hotspot that people want to go to, whether it be Glacier Park, a lot of stuff out west, airports I've never heard of before. But it's not any really different, the type of destinations. Yes, the actual airports have changed a little bit, but that's typical.
Thank you. Wendi, you're based in Daytona, is that right?
I'm actually based out of a home office in Texas.
Oh, you're in Texas, okay. Because right across the US, it's been a pretty strong market over the last year and a half. I know that Hunt and Palmer posted, record revenues. What has been, where has it been hottest? Because I know you cover, like, as we were saying earlier, right across the cargo, CJ, BizJet. What's been the hottest market in the charter demand?
During COVID, it was a lot of cargo. I mean, that's what kind of sustained our business. And as 2022 came around and the market started really opening up, the executive side is coming back pretty strong. It didn't hit really, I would say our boom is now third quarter. It's just now starting for us in the boom. But over the last 9 months, it's been a slow, steady pace of increasing. And a lot of those are still the executives that are flying, but they're just doing a point-to-point versus, week-long road shows. So it's a slow, steady build for us.
Okay, so that's interesting. So I think what you're suggesting is big boom in terms of perhaps the charter market. Then as that starts to sort of taper off, you're getting the corporate businesses coming back into the market. Is that right? Still coming back now?
It's still coming back. Because I'm in the executive division of the U.S., our biggest charter is the banking industry. So we didn't see any of that. They were still at home on Zoom doing their business. They are now realizing that face-to-face, we did our first roadshow, I think, in July, which is not a normal roadshow month. And once that one hit, it's like they all started coming back. So it's, I'm in some terms extremely overwhelmed with the number of, multi-day roadshows that are coming up.
I mean, that's interesting because, IPOs this year have fallen off a cliff, right? I mean, last year was a record. This year, I don't know, it's sort of 10% of what it was last year. Do you not see that impacting the demand?
It has not 100% impacted. I think we have we're back about 65% of that is starting to come back. I think we'll see that really in 2023.
And what about the freight? You mentioned earlier that initially it was cargo that was really sort of driving demand for aircraft. I mean, we saw that as well from tracking cargo aircraft. Typically, as cargo activity starts to fall right across mobility options, it's a sign of the economy kind of slowing. Are you now seeing your cargo demand slowing?
No, we haven't seen our cargo slowing up. That part is still, we've done business with a lot of people, so they just continue to come back to us because they found that it works. We have a bigger boom in our music industry and our commercial. As soon as the market opened up, the road shows for the music industry really took off. So that was our big boom at the beginning of the year.
Okay, that's a very interesting intro. Andrew, back to boring old Europe, right? We're away from. Have we missed out on the action? What do you think? You know the European market very well. I mean, do you feel that there's been essentially a sort of different temperature in the European region?
Yeah, I think it's probably fair to say that the boom in Europe hasn't been as significant as it was within the US. And I think there was a few different factors that have perhaps contributed to that. There was definitely a pent-up demand. there's no question of that. People wanted to travel. They hadn't traveled for 2 years. They'd saved up some money. So perhaps, we had clients who, not necessarily on our aircraft, but perhaps at the entry level, that chose to fly privately. In combination with that, there have been a number of aircraft that have left the charter fleets across Europe, whether that's as a result of COVID, where the owners took them out of the charter market and haven't returned them. I think we're all aware of the current pre-owned prices for aircraft. So a number of aircraft have left Europe and been sold into the US. There's less capacity. The consolidation that we've seen, the likes of VistaJet and Air Hamburg, that's taken capacity out of the market as well. So I think it's been a combination of factors that really have driven the volumes that we've seen over the last year, 18 months. But for me, I think that the biggest benefit for us as an industry hasn't necessarily been the volume, it's been what it's done to the pricing. Business aviation charter pricing has been depressed for quite some time, even pre-COVID. And I think what we're now starting to see, you can chase the volume if you want, but I think what we're seeing with the good operators is actually they're starting to yield manage a little bit better. We're seeing the prices back to the point that they should be. They're not overpriced, but it's a reasonable price for the product that we're offering.
Yeah, I mean, it's interesting because a lot of the airlines are announcing, they've been kind of quite a profitable year despite, essentially flying less. Do you feel that, the margins are actually increasing as well as the prices? Or are you actually simply having to manage an increase in costs across the board?
No, it's definitely a combination. Every charter that we do, for example, it's costed. So we know the cost of the flight, and then the margins are applied on top of that. So the margins have increased on almost a capacity, a per day basis, I would say by at least 40% compared to where we were pre-COVID. We do have additional costs within that. Obviously, fuel's increased significantly. We're seeing airport charges increase significantly. So there are other factors within that. But on the whole, I think it's a good time to own an aircraft if you want to generate a reasonable margin from charter.
What sensitivity is there from the charter market around this price increase? I mean, 40% is pretty substantial.
Yeah, I mean, as I say, that's kind of on the margin side. It's not a revenue increase or a yield increase of 40%. I think what we're probably going to see over the next 6 months is an impact at the entry level. There's a number of external factors. I mentioned fuel. Pre-COVID, we were paying in some airports $1 a gallon. Those same airports, it's now $4. Inflation in the UK has now been announced, it's hit 10.1%. So there's external factors that are putting pressure on the individuals who are entering the market. And I think there'll be question marks for those guys as to whether they will charter at the moment or whether they won't. Which is bad news for the whole industry because we need those entry-level clients because they might be flying a Mustang today, but they could be flying a Global in 10 years' time. So we need to keep an eye on that. I think the majority of our fleet is made up of heavy and ultra-long-range aircraft. And I think the yield differences as a result of margin of fuel isn't necessarily putting people off.
I mean, Chris, this kind of, if I can put you in the hot spot there. I mean, the inflationary pressures that Andrew's talking about. How difficult does that make life, for you in terms of all of the logistics, the fuel, the services, the prices going up? How are customers responding?
Well, first of all, we haven't put our prices up just yet. No, I think we haven't seen too much change in the entry-level market just yet. The increase that we've definitely seen in the last 3 months has come from the corporates, and that's an increase. The almost recession-proof individuals that are flying, and businesses that need to fly regardless of whether inflation's at 10.1 or whether it's at 4 or 5%, it doesn't matter.
What makes, I mean, just looking at the London environment, what makes one airport kind of get a competitive edge, particularly for charter customers? Is it the flexibility in opening hours? Is it the pricing of the fuel? Is it? I know you just brought the A220 into your target market. Is it the accessibility to different aircraft types? What are you seeing as the key competitive factors?
Yeah, I think it's a mix of factors, pricing, but I think the number one key factor has been location, like I mentioned previously, where everyone has moved away from our core market, which is London. You know, we're the only airport located in London. I think that's been the number one factor. We could reduce our fees to almost zero, and I can guarantee that we might see a bit of an increase, but I wouldn't imagine we'd have a significant increase. Fuel, there's ways around it, you know, although I wouldn't advise it, I'm sure. Tankering is a way that operators can come into London City if they're not happy with our pricing model. Mm-hmm. But that's not just London City, that's impacting everyone at the moment. Mm-hmm.
Mm-hmm. And Andrew, I mean, what pressure are you seeing for charter customers, for the charter business? Is it starting to squeak? Is demand starting to hurt because of the increased costs which are coming to your business, and presumably you've got to pass on in terms of charter prices?
Well, we still haven't seen too much pushback on pricing. It's really still, at least in our market, all about availability of not just the aircraft, but the biggest challenge is having crew to fly these aircraft, and I'm sure we'll get into that a little bit, but not to mention crew and maintenance parts have been scarce with supply chain problems. So these are all the challenges, and the price has not become a challenge as of yet.
Oh yeah, let's talk about that a little more. The supply side constraints. I mean, just a basic one. How much better could you have done if the availability of, you know, crew and parts, essentially if we hadn't had the supply side, you know, constraints and disruptions? Could this market boom have been, you know, double the size?
Easily double, if not triple, if I had more pilots, more planes, parts. You know, not currently, because we have seen a little bit of a lull here post Labor Day, but at the peak that we've experienced the last 18 months, absolutely could have done triple what I've done.
And is it to any extent under your control? I mean, what can operators do to try and navigate this?
Well, there's a lot we do. You know, we work with, you know, pilot retention is tough, you know, and it's no mystery out there that what we're up against. I hear regional airlines are offering outrageous bonuses to get pilots, and you know, there's always these incredible opportunities for the pilots, so it's very hard to retain. But you do what you can. You try to give them a decent schedule. You try to give them decent aircraft to work with, and but a lot of it, I hate to say, is really beyond your control, especially with the parts. You know, I've had a very popular aircraft down for weeks at a time waiting on something like a brake pad or a tire, things like that completely can shut you down. And it's sometimes it's very helpless feeling.
Is it a collaborative market in which you can find other operators to pick up your passengers?
Oh, absolutely. The industry has been a reputation of working with each other wonderfully, and parts as well. You know, we were buying a lot of our parts from other operators, quite frankly, and you know, we do kind of work well with each other, and that's always been something about this industry as long as I've known it.
And Wendi, are you seeing this? I mean, are you having to disappoint some customers simply by saying, you know, it's whatever, it's AOG, it's non-available crew? Does that happen more than ever?
More than ever. I've been in the industry over 20 years, and the first time ever I reached out to over 100 operators, and I had to go back and tell a client, I'm sorry, I have nothing. And that is not something I've ever had to do. I mean, I usually can reach out to 10 or 15 and give them, you know, 7 or 8 nice options. And it's, you know, it's hard because the availability of the aircraft out there is not there for lots of different reasons. One of the bigger ones is, you know, the companies that have bought and combined and become one, and they have their fractional clients, and so they've, you know, absorbed a lot of the operators we used to go to as a broker to get airplanes. More recently, really literally in the last probably 7 to 10 days, I've been able to reach out to a couple of those because they do still do the ad hoc charter, and gotten my first quote in 10 months from both of them, which is amazing because I'd been, you know, no availability, you know, and that's hard when you reach out to that many operators and you have nothing to offer.
Because, I mean, that's something that's quite distinctive about the US market. We don't see so much in Europe, the sense that, you've got a fleet operator, but they're also running a really substantial brokerage. So as you get this consolidation, is it essentially a case of like, okay, you're not touching you're a competitor, you're not getting access to my fleet. Is that what happens?
Not really. We, like Andrew was saying, is that the industry, as long as I've been in it, have been friends. I mean, we work together, we play together, we share information. I think part of that is who I am as a person. If I come to you, I want a relationship with you. It's not about, who has, I'm from Texas, so who has the biggest hat and the prettiest boots? We don't compete that way, because if we did, then we wouldn't be sitting at MBAA right now.
Right.
Yeah.
But necessarily, if you've got, because one thing that has changed, right, is we've got a lot of outside investment come into the industry. So to an extent, it's just becomes, black and white performance. You've got to sweat the assets, and I should think in that kind of environment, you can be friends, but essentially they've got to they got to get their aircraft working for their brokerage organization first and foremost, right?
Yeah, of course they do. And I'm not going to say we're all, the best of friends, but we do our best to stay friendly and cordial and help each other out as best we can.
Yeah. And Andrew, the owner's point of view very well. Are you seeing owners that are essentially kind of, I think you mentioned earlier, pulling aircraft out of the charter market because either they don't see that as necessarily, perhaps it's depreciative on the value, but perhaps also this is a lot of new owners come into the industry, they want to fly the aircraft, they want that availability.
I think it's slightly the opposite now. I think when COVID first hit, we saw a lot of aircraft exit the market. Some of those owners have decided, for whatever reason, not to put them back into the market, or in some cases to sell them. I think, going back to what I was saying before in terms of the yields that charter is commanding now, it's almost a reset. It's kind of, I feel it's where it should be. The aircraft aren't being treated as a commodity in the same way that they were pre-COVID. And for the first time in a long time, the economics actually work for an owner or a potential owner to buy an aircraft. As long as they buy the right model, they can put it into the charter market. They can have quiet enjoyment of, let's call it 100 hours a year of their own flying. And actually the charter revenues will cover their own direct operating costs and the revenue, and the fixed costs associated with aircraft ownership. So it's actually bringing in new entrants to the market that we haven't seen before. So again, it's good for the industry. You have to balance that with the current cost of, again, pre-owned. Obviously, we saw a huge spike in that. I think the data would appear to show that it's leveling off a little bit. But I think if that's the case, and if revenues stay where they are, we're going to have a whole new generation come into aircraft ownership and add capacity to the charter market.
And looking at charter products, I know you and I over the many years have seen initiatives come into the business, right, which have sort of changed the model, adjusted the model, looking at everything from, per seat demand, shuttles. Is the sort of, because you're hinting at actually charter becoming a profitable business model if it's managed right. Do you think that this is going to draw into the business a lot of new initiatives, a lot of new business models chasing this new market, essentially?
I think it will. There's a lot of factors that have to come together to make it work. I mentioned you have to buy the right aircraft at the right point in its lifespan. You have to work with an operator that understands and can manage the costs of that asset. And either a broker or a charter operator that can yield manage it and sell it at the right price. And you need an owner that is taking a long-term view as well. If you have all of those things, then absolutely there's an opportunity to do that. We have aircraft, and we know other people with aircraft and other operators where they are doing just that. I think as well we've seen in the UK and obviously in the States that kind of hybrid model where it is a per seat basis. I think we'll see more of that come into the market. The airlines, you mentioned, that they've had record profits this year, but the joy of flying through a commercial airport is maybe still not what it was. So the hybrid model, I think, is a really interesting way for again, new charter clients to test the waters and come into the market.
Yeah, I mean, Chris, you see that on a daily basis because obviously London City has got the scheduled airlines and has got the private jet business. Are you're probably even seeing specific customers. Are you seeing them like shift? Are you seeing them saying, okay, we're not using the airlines any longer, don't have the connectivity, don't have the reliability, flying private? Are you actually seeing that?
Yes, particularly for the cancellations. Mainly was picking up a lot of ad hoc stuff within 3 days or less. The requests were coming through for the smaller charter companies. PC-24s, Mustangs, Citation XLs were extremely popular for first-time users of the business jet world. I have to be careful because we were obviously employed by London City Airport, but the schedule was very robust.
Yeah, I mean, shifting topics to perhaps a sort of, existential subject being sustainability and the climate impact from BizAv and from the airlines. What do you see of that from, obviously kind of City of London, that's a sensitive place to be in terms of these topics. Europe in general, we've seen all sorts of proposals in the last, couple of months, even to ban business aviation aircraft. Well, what do you see of that, and how is the airport? I know it's a very broad question, but can you pick on a couple of things that the airport is doing to manage that essentially threat to the business?
Sure. Did you want to answer this one? No, you sure? It is me. Okay.
It's all you.
Well, at London City Airport, we believe that we can be net zero by 2030. We've been doing a lot of steps, even in the last decade. Things like changing our pushback vehicles to fully electric vehicles. In the last 2 years, we've swapped out our entire fleet of mobile ground power units, which were diesel, to now fully electric. We also sit within the London ultra-low emission zone, so all of our vehicles that are going from landside to airside, they have to meet a certain emission as well. And the plan will be, we'll have fully electric fleets throughout the company.
And does that make a difference for customers? Do you think that kind of promotion is going to actually draw some customers who use London City rather than other airports?
Yeah, I think so. And it has to be a collective. We're all in this together. We have to be promoting the business model, the business aviation model particularly. And I know it's one of the key drivers for the airport as a whole at the moment.
Yeah. And Andrew, what from a charter operator's perspective here in the US, how do you manage your commitment towards sustainability investments, and how do you promote that to your addressable market?
Well, with a lot of the passengers we fly are quite often very influential people, industry leaders, and the hopes are that what they do in their careers and their personal lives do something to protect the planet, because I don't think there's anybody sitting up here that's going to say that flying private is a green initiative. But the hopes are that we can do things in our lives and in the way we conduct our business, other than flying privately on a private jet, that can really help save the planet.
Yeah, I mean, Wendi, I know Hunt & Palmer's got an offset program. Is that right?
That's
right across
correct.
all your activity. Can you just tell us, is that having a sort of tangible effect? Have you seen? Was it something sort of that you just felt like necessary to do because, frankly, everyone's got to do this, or do you feel that this is like an investment that's giving you a competitive edge?
I feel like that it's something that we could do to help the sustainability of our country, of our, keeping it green. I really honestly feel like that it doesn't give us a competitive edge. It's a great program, and anytime an operator offers a similar program, we opt into it, because we're going to give back to the planet and we're going to do what we can. I think a few years ago, when a lot of the carbon offset programs came into play for brokers and operators, is when the first biggest impact of that is, and I think it's kind of tapered off just because it's not at the forefront, and especially after COVID. I mean, the people are thinking more of their personal health versus our planet, and I hope it switches back, but that's where we're kind of at as a society at the moment.
And Andrew, are you, across ACASS, bringing sustainability initiatives into your management of owners and prospective aircraft purchasers?
I think this is a really interesting subject because personally, I think it's one of the biggest risks to our industry for the next few years in terms of how we, as operators, as an industry, as customers, address this issue. But I'll be really honest with you. I don't think I don't think we're doing enough, and I think there's a few reasons for that. We along with Wendi and the guys at Hunt & Palmer and many other operators, we've offered carbon offset schemes to every client that wants to fly. The take-up is generally quite low, and I think the idea of forcing a carbon offset program as part of your pricing is a difficult one because it puts you at a commercial disadvantage against your competitors. I think the only way really to address that, if we wanted to incorporate carbon offsetting on a meaningful level, is that there would need to be legislation that creates parity and ensures that every operator is doing the same, and that's reflected in the pricing that the consumer sees. I think the other thing that obviously everyone's quite excited about is the development of SAF and how that can be introduced into business aviation. Again, from a commercial standpoint, the cost of SAF is very, very high still. And I think as an industry, we need to be calling upon the commercial airlines to start introducing that into their fleets. That naturally will then reduce the cost within business aviation. And also whether governments are able to subsidize SAF for airlines within that first few years of introduction. So I know that's a slightly different answer to the question that you asked, but I think that there are a number of things that we have to start taking seriously, but we need to do it as an industry across the board.
I think we've got time for a question or two. If Catherine, I'm sure you've got a question. But would anyone like to ask a question to these panelists while we've got them here? I've got a question for Andrew on the tax, even if it's kind of perhaps welcomed by the industry. You know your owners pretty well and your charter customers. If take the price of SAF. I don't know what it is now. It's kind of what 3, 4, 5 times the size. The jet A1 gallon. Would your customers still fly? I mean, how many customers would you lose if they had to pay for the fuel component times multiple of 3 or 4 times? Would they still fly?
Oh, it would be if we had to increase the prices to the consumer to that level. It would be, most of our business is long range, so we are a little bit more immune to price increases than at the entry level. We would lose 50% of our business if we had to increase fuel by that.
Any other questions? I'm going to ask one last question, if I may, to each of the panelists. You know there was like one surprise question, right? No, okay. So if we're all sitting here, it's a cliche one. But let's say we're all sitting here in a year, right? What do you think, if you just like pick one factor that either kind of picked your business up or, frankly, put it down on the floor, or at least hurt the business, what would it be? What's the factor that you're either worried about or excited about in the next 12 months in terms of getting more business, particularly more charter demand?
That's a good question. The charter market, if it drops off, it won't have too much of an impact for our private jet centre. Mm-hmm. I think I'm thinking of another way of answering this. What we've seen here today, albeit not so much charter, but corporate and business, which is our core, we've been inundated with requests just from the show alone. So I think that will continue to grow. I hope it continues to grow into next year.
So essentially you're saying that your corporate business kind of hedges you against the kind of tapering off in charter?
Yeah, exactly that.
Okay, that's good.
But we still welcome charter,
yeah, of course. Yeah. Now, and Andrew, what are your thoughts?
Same question. I'd like to think that with a year from now, I'm hoping to see a little ease up on the ability to retain flight crew members, mechanics, quality employees. I think I'd like to think that what's being offered to them, counter to what we can offer, is a temporary thing. And I'm hoping that we'll be able to staff with maintenance and pilots with some really quality people without the difficulties we're having today.
Okay. And Wendi, how are you going to beat the record again, right? Because you set a new revenue record in 21. Now you're going to beat it in 22.
Of course.
Of course. So how are you going to beat it in 23?
For us in 23, I think it is going to be that the banking industry is going to have a boom, and so therefore, because of the clients we work with, we're going to see a boom in that, which again will reflect to operators like Andrew and Andrews. So I think that's going to be the biggest thing for us is the banking industry. I know we're right now kind of in a questionable space of that, but it hasn't stopped them from starting their road shows in person. I think the fear for a lot of us is that we'll see another 2020 and another 2021 because the world is now on a scare of the next big pandemic. What are they going to do? And as history proves, they just seem to get harder and harder to move through.
Yeah. And Andrew, finally, you're very good at being skeptical, I know. Well, rose-tinted glasses, what's the kind of most exciting factor next 12 months for the charter business?
I think Andrew mentioned it before. We still haven't really seen the return of corporates, not to the level that they were pre-COVID. The Far East market, certainly for Europe, is nowhere near where it was as a result of two things. I think they've been a little bit slower to open back up post-COVID, and obviously the situation in the Ukraine is limiting traffic heading eastbound. So I think there's opportunities there. I think if the pre-owned market just does kind of level off, I think we'll see more first-time buyers, which will bring more capacity naturally into charter. And my main hope is that we're able to maintain, as I say, the price points. It's not the volume's great, but it's slightly irrelevant. It's about the aircraft being profitable, and the industry as a whole will benefit from that.
Great. Well, that was fun. Thanks, everyone, and thank you very much, panelists.
Thank you.